Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs, the products. You just need to make a call, 800-306-1990, 800-306-1990. Save that number in your phone. You'll need it. The S&P 500 now down 42.43. 10-year Treasury's up 1 basis point. It's coming back. The mortgage-backed securities, those are down 33 basis points. That means interest rates are up ever so slightly. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. 30-year conforming loans, 6.462 is what they locked at yesterday, down a bit. The 30-year jumbo loans locked at 6.168, down a little bit. 30-year FHA loans, 6.386, up just a little bit. 30-year USDA loans, generally no down payment, 6.267, up a bit. Hey, that's for you, Riverside, San Bernardino. Think about those. And the best loan on the market for those that earned it. That's the 30-year VA loan locked at 6.196, down just a little bit. Now, why are the markets going in a different direction today? Well, it's because of the Federal Reserve.
Such an idiot. Such an idiot. Such an idiot.
Yes, stop that. Stop that. Stop that. Stop that. The Fed minutes. They showed the Fed is focused on wage growth and they're waiting for the job market to get worse. Isn't that nice? How crazy. The Fed wanted more jobs, so they poured gasoline on inflation. But now they want people to lose their jobs to bring down the inflation that they created. Again, I say.
Such an idiot. Such an idiot.
I mean, can't you figure out what you want to do? Can't you read? Can't you watch history? Can't you look in the windshield instead of the rearview mirror, you idiots? I mean, it just amazes me how stupid these people can be. Let's see what a couple of them have to say. Minneapolis Fed President Neil Kashkari blaming the inflation we're seeing on is blaming the inflation we're seeing on surge inflation and demand made by a correlation to Uber and surge prices. He blamed the Fed's faulty economic models for their mishandling of inflation, but as Peter Bookvar said, quote, "It doesn't take an economist's degree or a PhD or even a class in economics 101 to understand that when the federal government spends $5 trillion over 2 years, 20 to 25% of the U.S. economy at the time, and its central bank finances most of it by buying the bonds used to pay for it, that we're going to most likely have surge pricing, inflation, and realize it then, not after the fact, a bunch of idiots." Kansas City Fed President Esther George said she wants to get the Fed funds rate above 5% and stay there for some time until inflation is falling convincingly. I guess she's not smart enough to see that inflation has already been falling. I guess that's the issue. When asked on declining rents and the fall in money supply, she said they are paying attention but have not changed their stance. Sounds like 5 Republicans I've been watching in Washington lately. ADP employment report. Released their employment report this morning showing that there were 235,000 job creations in the month of December, which is stronger than the expected 150,000. Small and medium-sized businesses added almost 200,000 jobs respectively, while large businesses shed 150,000. Looking at the sectors, leisure and hospitality led the games. ADP also reported that annual pay for job stayers increased 7.3% year over year, down from 7.6%, not bad. And while job changers saw an average increase of 15.2% up from 15.1%. Didn't help the markets. The markets want to see jobs dropping because then they think maybe the Federal Reserve will shut their mouths and get out of the way. I'm not sure that'll happen because they're just like those 5 Republicans in Washington. All they care about is getting their name in the paper for a little bit. Initial jobless claims measures individuals filing unemployment benefits for the first time fell 19,000 to 204. Continuing claims are those that continue to receive benefits after their initial claim fell 24,000 to 1.69 million. It's still up 375,000 over the last few months. It's also noted that this is a holiday week and is likely skewed to the downside because of this. And finally, we did get the JOLTS report. Job openings and labor turnover is what the JOLTS report is. There are 10.5 million open jobs right now, 10.5 million jobs that are opened. If you need one of them, well, they're there. So that is the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990.